According to the latest data from the Bureau of Safety and Environmental Enforcement, oil production in the Gulf of Mexico has been slashed by nearly 95% and natural gas production down 94%. Let's bring in Tom Closer from Oil Price Information Service. Tom, good to see you as always. Are you surprised that we haven't seen a bigger reaction in prices upwards, given some of those statistics I just mentioned?
No, I'm not, Wilfred, because a lot of things have happened in the last 16 years or so to make sure that that production gets returned much more quickly. First of all, Gulf of Mexico production used to be about 25% or so of U.S. output. Now it's maybe 15%. So a lot of it has been tilted toward shale. Secondarily, a lot of equipment has been put into the infrastructure there so that it can be restarted very quickly. I'm a little surprised that refined products, and particularly gasoline or RBOB, hasn't moved higher, but we've got plenty of time for that. This is going to be measured in weeks in terms of restoring refineries. It'll be measured in days in terms of restoring offshore oil production.
A good point there with the refineries, and I'm wondering if you're a consumer, if you're looking at prices at the pump and how that may have a trickle impact down on your business. I know Walmart pays close attention to gas prices. What do you expect if it takes weeks for refineries to get back online? Are we looking at a big gasoline spike in just the Southeast, say, or throughout the country?
Well, I think the Southeast was exempt from the $3 plus prices other parts of the country, most notably the West and the Rocky Mountains saw. And they may gravitate toward that $3 number, but I don't expect a super spike or anything like that. I think it'll be more of a wobble higher, and it may take place this week, because this week, after all, is a big week in terms of demand and consumption. It drops about 5 or 6% in ordinary years after that, and the recipe for gasoline may change any moment if the EPA decides to say summer's over and you can use the winter recipe for gasoline. That'll help a little bit, but I think this will be an unusual year, and it won't see those sort of crashes that we've seen in previous autumns. The components that are part of the recipe for gasoline in the autumn and winter aren't as cheap. I don't cover petrochemicals per se, but petrochemicals and all of the different molecules that support those are very, very tight throughout the country. Anybody that's had to buy resin for a surfboard or for a pool or for a boat, know about that.
Once we move past Ida, hopefully fairly soon, Tom, what is your outlook for WTI throughout the rest of this year?
Well, I'm not a believer in the super cycle. You know, I believe in super bad and super free super cycle. So I think that we're probably going to have episodes above $70 for WTI, and it should ostensibly tighten. This actually hurts the bull case for WTI because it removes, 2 million barrels a day of demand for crude in the United States momentarily, and it may persist to where October and November we don't use as much. So I don't think we'll get to those astronomical levels. And by the way, you're going to hear this a lot this year, that it's the highest Labor Day or most expensive Labor Day since 2014. 2014 was the end of a 4-year stretch where Labor Day gas was $3.45 to $3.85. So we're not quite there yet.
Tom, thanks for joining us. Good to see you as always.